The US stock market is in a correction phase at this time. All gains from 2018 have been wiped out, and traders are starting to worry about the lack of options today with rising interest rates. This has caused a flow of capital into exotic and toxic investments, seeking for any amount of profitability. Of course, this won't end well, but who cares, right? You came here for the truth, so let me unveil that for you. Today we're going to talk about the global economic collapse. I'm going to cover various issues, and I wanted to begin by taking a look at the Wilshire 5000. This is the total market cap in the US, and you can see right here that it has been completely dismal in the last month. We've seen throughout October the Wilshire 5000, along with the rest of the markets, the S&P, the Dow, and so on, have been terrible all year long. We've erased all the gains from 2018. I consistently had been hearing that the markets are up, but when you look at it on any level, that couldn't be further from the truth. Now, what happens in a few days from now? That could certainly turn around. But in general, the market is not up. And I've covered this over and over again. I'd like to move on. Investors for years have seemingly adored technology stocks as much as most people love their smartphones. But Wall Street has suddenly soured on Silicon Valley and the rest of tech, triggering a stomach-churning downturn in a turbulent October. Some of the hardest hit stocks belong to the 5 companies: Facebook, Apple, Amazon, Netflix, and Google. They have collectively attracted billions to their products, lucrative markets, and so on. They're talking about their FANGs. And right here, stocks have plunged between 4% and 20%, collectively wiping out nearly $400 billion. And that gets worse when you look at it further into detail. More than 20%. And in fact, the FANG stocks are in a bear market. Interest rate sensitive sectors already show signs of wobbling. Home building has contracted in 5 of the past 6 quarters. Moreover, a stronger dollar, which raises the cost of exports to foreign buyers, could weigh on U.S. trade. You add on top of that everything that's happening with the geopolitical issues between China and the U.S. Look at what's going on between Russia and the United States as well now. It's just piling on, and then you have the interest rate increases, which has been really central to what's been happening in the stock market today. This isn't looking good on any level. The boom time is over, and we're now officially experiencing, by the way, this is referring to Australia, they're experiencing the house price fall that we had to have. This is Deloitte. And if you can believe it or not, my friends in Australia, check this out. Our house prices here in Australia had streaked past anything sensible by way of valuation. I have completely agreed with this. And then check this out. Now, finally, gravity has caught up with that stupidity and prices are falling. That's literally a quote. So what we're looking at here is reality being restored in every market, whether it's housing in Australia or whether it's tech stocks from San Francisco and Seattle. It doesn't matter. Everything must revert to the mean. Everything must revert to the mean. You can't evade that. There are periods of time which things get out of hand, but it must revert to the mean. In Sydney and Melbourne, house prices are falling by over $1,000 a week. Incredibly significant when that starts to add up. Sure, if the price of the home is $1 million, $2 million, you might not think it's a big deal. But after a few months, that starts adding up, especially if it's consistent. You start to have a lot of inventory building up. You start to have homes that take forever to sell. Global house price indices, we're looking at the percentage change year on year. And I want to show you this right now. Looking at Canada, which has dipped down. Australia significantly down. The UK has taken a dip. And just barely with the US. But we're looking at different markets around the world essentially, and they're getting spooked. China produced 2 billionaires a week last year as the fortunes of the world's ultra-rich soared by a record amount. And this gets into the fact that there are now 2,100 people that are billionaires. It's interesting to see the amount of money that's being concentrated into these few hands. Look, whether it's 2,000 people or 5,000 people, ultimately a small amount of individuals hold and control the wealth, at least on the level that we see. You're not going to get those old banking dynasty family names to appear on any of these lists. But it shows us at least that there's a group of people making a hell of a lot of money and then everybody else. This is the Chinese currency versus the US dollar, and I couldn't believe it. It's been about a week or so since I saw this nearing 7 to the US dollar. And I think 7 is going to be a trigger point, but we'll see. I just want to show you that to you and make sure we stay up to date on that. Now, the Buffett Indicator, I've shown you this before. Many people know about it. Essentially, we're looking at that Wilshire 5000 that I showed you, all the US stocks, and it's in a ratio between that and the GDP. So when you look at that, although this has changed just recently a little bit, we can see that we are, by any stretch of the imagination, overvalued today. It's unbelievable to see how bad this has become. Q ratio since 1900. Look at this. Now, it basically explains what this is very quickly here. The Q ratio based on this data here is the ratio of corporate equities liability divided by corporate business net worth. Okay? And they're showing us here that based on this indicator, we're looking at way overvalued. There's no other way to put it. And then last but not least, everybody's favorite, the Prime Minister with the fantastic hair, passed a carbon tax. Now, the way the carbon tax works here is basically what they're suggesting to us. We'll see if it actually happens. They're taxing everybody. Your gas is more expensive. Your energy is more expensive. Everything's more expensive. But at the end of the year, you're going to get a check. It's going to be a few $100, and there's different factors. And then each year, that's going to get more and more and more. I just think that it's completely wasteful to tax you up front and then pay you back later. I understand they're trying to tax the polluting businesses and so on, all of this stuff. But to me, it doesn't make a single ounce of sense to tax you and then give you it back later. By the time it makes its way around that system, a lot of it is wasted. It's just a silly concept, truly. But I'll stop there. I know a lot of people are a fan of taxes, so I will end the video there. If you found that informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, well then, these two books have it all. You can check them out at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.